Congratulations! After all the years of hard work and studying, you are ready to go out into the world and start that career or taking the next step into graduate school. Now that you are about to take your place in the working world, it will soon be time to begin paying back the student loans that help make your education possible for you. You have some decisions to make and some important things to understand about your student loans. This session does not complete your loan exit counseling requirement. After this session, you will need to complete the federal exit counseling at studentaid.gov for Stafford loans. I will remind you of this obligation at the end of this presentation. Begin by logging into studentaid.gov using your FSA ID. It is what you used each year when you submitted the FAFSA. If you do not know what your FSA ID is, you will need to use the help prompts at the bottom of the screen. You all have an account, so no one needs to create an account. When you log in, you will see your personal aid. This example only contains loans. If you have received Pell Grants, you can click on the Grants tab to see your gift aid that does not need to be repaid. This student has borrowed 10 loans with the total original awarded amount of $27,000. This student has a total balance of $24,058 as of January 31st of 2023, which includes the principal and interest. It is less than the $27,000 awarded, either because she did not borrow the maximum awarded, she's already made payments towards her loans, or her level of need changed and adjustments were made between subsidized and unsubsidized loans. Today, we will explore repayment options, see examples of the loan simulator tool, learn about public service loan forgiveness, discuss income-driven repayment options, and learn about loan consolidation. All of these topics are found here in the helpful links. By clicking on the View Breakdown link, you will see a page like this. This page shows you the servicer of your loans. In this case, it is the Department of Ed or MOHELA. You can pay on the servicer's website by clicking on the blue link. If you click on the blue square with the arrow shooting out next to MOHELA, it will take you to the servicer's contact information. It also shows the total balance as well as when the next payment is due. If you click on View Loans at the bottom of the page, it will take you to see the details of each of your loans. This shows 5 of the 10 loans. Then you can click on the View Loan Details for each one. My Aid lists all federal loans from all schools, not just Carroll College. All schools from which you borrowed. This does not include private loans. If you have borrowed private loans and you need information about them, please reach out to me and I can help you. If you see a loan that says Parent or Plus loan, this appears on your record because the loan is tied to your Social Security number. However, parents, not the student, are responsible for repayment of Parent Plus loans, and they cannot be consolidated with the student loans. Grad Plus work very much the same as Parent Plus loans, except the borrower is the student, and the student must be pursuing a graduate degree to be eligible. The interest rate is 0% on this particular unsubsidized loan because no unsubsidized loans have been charged interest during the loan payment pause. So an unsubsidized loan has been very much like a subsidized loan during the COVID emergency. The scheduled start of the repayment date on this particular loan is July 19th of 2025. The student loan payment pause will resume 60 days after the department is permitted to implement the program or the litigation is resolved. If the program has not been implemented and the litigation has not been resolved by June 30th of 2023, payments will resume 60 days after that date. Pay attention to the news. For your information, the payment pause has been extended 8 times. Alternative or private loans are never included on studentaid.gov and cannot be included in a federal student loan consolidation. Alternative loans will always constitute a separate payment from your federal loans. Separate payment options may be available to you for your alternative loans. Check with your private loan lender. Private loans will not be available on studentaid.gov. If you have private loans, you can pull a free annual credit report at annualcreditreport.com or reach out to the financial aid office so we can pull that information for you. During the pandemic, you can access your credit report weekly for free. Nursing loans, or NSL, will not be reported to studentaid.gov because they are not Department of Education loans. They are under the Department of Health. Be sure to check with your school if you are in a nursing program to see if you have NSL loans. Nursing loans can be consolidated with other federal student loans, but consider carefully because you would lose repayment benefits associated with these loans once they are consolidated. So you have a right to a grace period. Once you leave school, you have a period of time where no payments are due. For Stafford loans, that is 6 months from graduation, dropping below half time or withdrawing. During a grace period, no interest accrues on a subsidized Stafford loan. Interest continues to accrue on an unsubsidized loan, however. You have a right to a 10-year repayment term. You have a right to have loans forgiven or canceled in certain circumstances, and we'll talk more on this in a bit. You have a right to establish a credit history for yourself, either a good one or a bad one. It is your choice. Once you graduate, Carroll College notifies the National Student Clearinghouse. It is a financial institution formed to facilitate the exchange of payments. The clearinghouse stands between two clearing firms, Carroll College and the lender. Be sure to contact your lender before there is a change of status in your loan repayment. What if you can't make a payment? Let's say you graduate, but you don't find that dream job right away. How can you make a loan payment when you're unemployed? In many circumstances, you have the right to defer or delay payments on your student loans. Deferment is a legal right under the loan program. Interest is paid for you in deferment on subsidized loans. You cannot be denied a deferment if you are eligible. Forbearance is not a legal right. It is at the discretion of your lender or servicer, and they can deny you a forbearance. Interest is not paid on subsidized loans for you during periods of forbearance. You are still responsible. Improve your chances for being approved for a forbearance by keeping your account current. Call the minute you know you can't make your payment. Keep your address, phone, etc. current so that the lender can contact you. If you are unable to make a payment, your lender or servicer should always check first for deferment eligibility, as this is the best thing for you, the borrower. If not, they'll try to qualify you for forbearance. Most deferment and forbearance forms can be found online. Contact your lender for assistance. The Federal Student Loan Ombudsman represents one of your rights under the student loan program. The term ombudsman is derived from Swedish, and it means he or she who pleads on behalf of another. They are available to you free of charge to assist in resolving loan disputes with your lender, guarantor, loan servicer, or other entity. Only contact the ombudsman if you have exhausted all other avenues of resolution. Contact information is on your student loan contact sheet. Along with rights come responsibilities. You are responsible for notifying your lender if you change your name, phone number, address, or email. Report your changes within 10 days. Notify your lender or loan servicer immediately if you cannot make a payment. Do not wait until you are delinquent. Notify your lender if you are transferring schools or continuing your education. For example, you graduate with a bachelor's and you're continuing on in a master's program. Because Carroll College will notify your lender and/or servicer that you have graduated or that you are no longer enrolled at school. In order to qualify to keep your loans in an all-school status, you must attend an accredited institution at least half-time, which is usually 6 credits. The lender and/or servicer will note this in your file. However, you will still receive information as if you were not attending until the new school can certify your enrollment, which is usually done electronically after the 15th class day, or depending on the institution, they will complete an in-school deferment form after the start of the school term. The forms can be found on the lender and/or servicer's website. After you graduate, you will typically receive a letter from your lender saying, "Congratulations, you've graduated." It may inform you that your loan has been sold or inform you that who your loan servicer will be. It will contain information about repayment of your loans. Even if you do not receive this notification, know that you have a loan and you're responsible to pay that. Okay. You will also be provided with a disclosure statement showing what you owe, the interest rates, the estimated monthly payment amount, repayment options available, when payments start, and how many you will make. Typically 120 qualifying payments or 10 years of payments. Usually you'll be asked to sign and return 1 copy acknowledging your debt. Often the first disclosure letter acts as a first payment coupon that will be returned with the first loan payment. After that, monthly statements or a coupon book will be sent. So, do you know how much you've borrowed? Do you want to think about how much you borrowed? There is one place you can find information on all your federal loans, no matter where you went to school, and that is studentaid.gov. You will need your FSA ID and password to log in. If you borrowed private loans, you will not find the totals here. Please come to the financial aid office if you need that information, and we will help you find that. The standard repayment plan is the fastest way to repay your loans with the least amount of interest. Other methods may offer a reduced payment, but may increase the amount of money you will repay and the time it will take to repay the loan. Whenever possible, choose the standard repayment plan. If you must choose a different plan, you can always switch back to a standard payment plan later once your situation and your ability to pay improves. You can change repayment plans at any time for free. Income-driven repayment plans are based on the annual gross income and family size. They are evaluated on an annual basis. They are pay as you earn, repay, revised pay as you earn, IBR, income-based repayment, and ICR, income contingent repayment. Income-driven repayment plans are the only ones that will qualify for loan forgiveness after 120 qualifying payments if all qualifications are met. The income-driven repayment plans are, as I mentioned just before, pay, repay, IBR, and ICR. In 2023, FSA will begin displaying income-driven repayment payment counts on studentaid.gov, so borrowers can view their progress after logging into their accounts. You will find more details on each plan on the handout that I provided to you and in the Federal Student Aid Loans Simulator. Let me stress this again. The standard repayment plan is the fastest way to repay your loans with the least amount of interest. The Federal Student Aid Loan Simulator, located at studentaid.gov, is a tool to help you make decisions about your student loans and get an early look at which repayment plans you may be eligible for, and to see the estimates of how much you would pay monthly and overall. Use it to find a repayment strategy. Use it to decide whether you want to temporarily stop payments or lower your monthly payment if you are struggling with your payments once you have started to repay your loans. Or use it to find out what happens when you borrow more money to pay for education expenses, or return to school, or finish your studies later than expected. You can also use it to decide whether or not to consolidate your student loans. Keep in mind, this tool can't predict your future payments with 100% accuracy. In order to make these predictions, the loan simulator makes several assumptions as it calculates monthly repayment amounts. But it is very close and very helpful. When you click on View Details, it will list the advantages and disadvantages of each individual plan. This particular example is the standard repayment plan. The advantages is that this is the fastest payoff. You will save on interest. You are not locked into this repayment plan. If you are struggling to make payments, you can switch into any other plan that you qualify for. The disadvantages are that your monthly payment will be higher than some of the other options. Unlike income-driven repayment plans, your unpaid loan balance is not forgiven at the end of the repayment period. This is not a good option if you are seeking public service loan forgiveness, as you will either have paid off your loan after 120 qualifying payments, or you will not qualify for it at all. If you click on the green Compare button, you will select this plan to compare it to a couple of other examples. Payments start low with the graduated repayment example, and then they increase every 24 months over a 10-year repayment term. This plan works well if you expect your income to increase steadily over time. The minimum amount due will be enough to cover at least the amount of accrued interest. Monthly payments will never be more than 3 times greater than the initial payment amount. You will pay more for your loan over time on the graduated repayment example versus the standard repayment plan. The revised pay-as-you-earn or repay. Payments should be affordable to you because they are based on your income instead of how much you owe. Your monthly payments will be no more than 10% of your discretionary income. This is a good option if you are seeking public service loan forgiveness. Payments are recalculated each year based on your updated income and family size. Any outstanding balance on your loan will be forgiven if you haven't repaid your loan after the 10 years for loans taken out for undergraduate study, or 25 years for loans taken out for graduate or professional study. This compares the revised pay-as-you-earn, standard repayment, and graduated repayment plans side by side. The loan amount that I used to generate this example was the $27,000 as you review this comparison sheet. This example shows that the student has a repayment goal with the fastest payoff. Based on the selections and overall repayment strategy, the loan simulator recommends this student to apply for the revised pay-as-you-earn repayment example. Note again, you can change your repayment option at any time with no additional cost. Interest capitalization is interest applied to interest. The unpaid interest is added to your outstanding principal balance, which makes what you actually owe greater than the loan amount you initially took out. Capitalization occurs after your grace period on an unsubsidized loan. If you pay off the interest before you enter repayment, your principal will remain the same. This will save you money. What if you can't make a payment? Be sure to contact your lender before your loans become delinquent. Deferment is a legal right. Interest is paid for you on subsidized loans. You cannot be denied deferment if you are eligible. For example, economic hardship, in school, military service, or unemployment. Forbearance is not a legal right. Interest is not paid on subsidized loans for you during periods of forbearance. Improve your chances for being approved for forbearance by keeping your account current and call the minute you know you can't make your payment. Most deferment and forbearance forms are found online. You can contact your lender for assistance. A direct consolidation loan may help make payments more manageable by combining several federal student loans into one loan with one monthly payment. You need to apply for loan consolidation and choose a repayment plan. Depending upon the amount of your federal student loans and the repayment plan you choose, you have between 10 and 30 years to repay your direct consolidation loan. Private education loans are not eligible for direct loan consolidations. The interest rate for direct consolidation loan is fixed. The fixed rate, however, is the weighted average of the interest rates on all of the loans that you consolidate, rounded up to the nearest 1/8 of 1%. There is no cap on the interest rate. Once your loans are combined into direct consolidation, they cannot be reversed because the loans that were consolidated are paid off and they no longer exist. If you have questions about loan consolidation, you can call Student Loan Support Center at 1-800-557-7394. This number is also found on the student loan contact information handout. Other ways to pay on your student loan. First and foremost is prepayment. It saves on the amount of interest paid over the life of the loan, and there is no penalty if you prepay your loan. Many students graduate and do service work after college. AmeriCorps is an excellent opportunity to be of service and to get help repaying your loans. Teacher forgiveness. If you are teaching in an area of critical need, up to $17,500 can be forgiven on your Stafford loans. It doesn't hurt to ask your employer if they have a student loan repayment incentive. Often you have to commit to a certain period of service in order to qualify. For example, you work in a job for 5 years and they repay your loan 20% a year for the 5-year period. Public service loan forgiveness. This program forgives the remaining balance on your direct loans after you have made 120 qualifying monthly payments under a qualifying repayment plan while working full-time for a qualifying employer. You might be eligible if you are employed by a U.S. federal, state, local, or tribal government, or not-for-profit organization. If your school closes before you can earn your degree and benefit from the loans you borrowed for education, your repayment is canceled. Other ways to get out of paying your student loans, and I hate to mention these, but they are death or permanent and total disability. While these are not great options, we mention them because it is comforting to know that your parents, spouse, children will not be responsible for paying your loans back should something happen to you. Your loans in these cases are forgiven, which is another benefit of the federal student loan program. Bankruptcy is not an option. Student loans are generally not discharged in bankruptcy. Student loan debt relief that Biden had implemented has been blocked. Courts have issued orders blocking the student debt relief program. As a result, applications are not being accepted. The federal government is seeking to overturn this order. If you've already applied, they will hold your application. You can subscribe for updates at studentaid.gov. Again, pay attention to the news. If this is still tied up in the courts when you are expected to begin loan repayment, I recommend that you set aside the loan repayment amount, put it in the savings account until the pause is ended. Then you begin the habit of making the payment, but you will also be earning a little bit of interest. This information is from the Office of Inspector General, an independent entity within the United States Department of Education, responsible for identifying fraud, waste, abuse, and criminal activity involving education funds, programs, and operations. Be sure to pay attention to these items and be able to identify those that are trying to extend a student loan scam to you. Not every not-for-profit organization qualifies for public service loan forgiveness. It must be one with a 501c status. Check with your Human Resources Department to determine their qualification status. StudentAid.gov has a helpful tool, Ninja, to assist you as well. He's not as cute as this one, but there really is a helpful Ninja. So in order to qualify, you must be in an income-driven repayment plan and submit qualifying paperwork each year, even if nothing has changed. You either need to be a full-time employee for the federal, state, local, or tribal government, or for a not-for-profit organization, and you have made 120 qualifying payments under a qualifying repayment plan. Then you may be eligible to have the rest of your loans forgiven. Again, go to this PSLF help tool Ninja for extra assistance. To save money in repayment, take advantage on your lender's repayment benefits. 0.25% interest rate reduction for ACHs, or a direct pay from your checking and savings account. Incentives for on-time payments. Be aware that some lenders are going to give you a free month for paying 12 months on time. This is a way for them to add another month to your loan term along with the interest. So you may have that cash to pay for those extra Christmas presents, know that you have added interest and time to the life of your loan. For example, if you pay $50 extra a month, you will save over $1,000 and 2 years of repayment. Can't do $50 extra a month? Round your payment up. For example, if your payment is $111 per month, round it up to $125 or even $120. A couple extra dollars per month towards a payment can make a big difference over time. Be sure to indicate that any extra should go right to the principal. Use the loan simulator we just talked about to see how much you can save. To save more money, don't pay extra on your student loan at a 6.8% if you have a credit card that's at 19%. Pay these down, the high interest rates, as fast as possible, and then pay extra to your student loans. May be eligible for a $2,500 tax deduction using a 1098 form. If your lender offers it, pay bi-weekly instead of bi-monthly payments. How does this work? On a bi-weekly payment schedule, you make 26 half payments per year, 52 divided by 2. Rather than 12 monthly payments, you end up making one extra payment each year. This means that you would be debt-free 13 months sooner if you are on the standard 10-year repayment plan. Finally, do not skip payments, ever. Repayment of your federal student loan is a serious financial obligation. When you make payments on time, you begin establishing a credit history that will affect your future eligibility to obtain loans for the purchase of a car or home. When you apply for a job, employers often use your credit history as a way to measure how you meet your responsibilities and your ability to establish and stick to a plan. Licenses, including an LPN, CPA, driver's license, even hunting and fishing license, can be suspended. One license that is not included in this list, I might add, is a lawyer's license. Go figure. Loss of ability to obtain credit for a car, home, cell phone, etc. You may have difficulty signing up for utilities, homeowners insurance, renting an apartment. Credit checks may be required. If you start having problems, call your lender right away and they will work with you. Don't wait until you have several months behind and your credit is ruined. Call Carroll College before you get into trouble so we can help you as well. Use the loan simulator to estimate monthly payments and compare repayment options. Weigh the pros and cons of loan consolidation to decide whether it is right for you. Apply for public service loan forgiveness using the PSLF tool. Learn about the student loan payment pause and the one-time student loan debt relief. And finally, you will see this screen after clicking on Exit Counseling Stafford Loans link, or go directly to studentaid.gov. Click on Complete Exit Counseling, and then you may choose either an undergraduate student or a graduate professional student. Most of you will be clicking on the undergraduate student since you're completing your bachelor's degree. You will need to log in to start, so you have to have your FSA ID available. There's no place for you to stop or pause. It takes about 20 to 30 minutes to complete, and this is the federal requirement that you need to go to studentaid.gov to complete your federal direct Stafford loan exit counseling. You may do this now. If you have any questions, please let me know. Thank you for your attention to this very important topic. Now I hope you are better equipped to log into the Department of Education's website and complete this requirement. Thank you.